like JSPL from here on. Talking about steel, well, let's focus on another iron ore miner. Lloyds Metals Energy, they posted a rather good set of numbers. There's a big jump in the revenue front, led part by the mining division. Mr. Rajesh Gupta, the director at Lloyds Metal and Steel joins us, and Energy joins us on the show. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, in the past year, I think your dispatches were around 5.3 million tons or thereabouts in terms of iron ore. But the street believes that FY24 is going to be the big year because you've got the approvals for around 10 million tons. Could you tell us what kind of a sales volumes should we factor in for FY24 on the iron ore front?
Nigel, thank you for inviting us. We have got the EC for 10 million tons. We have been doing a run rate of 10 million tons for many months, a few months in the last year. And we hope to continue that and achieve 10 million tons in this coming financial year.
Okay. So 10 million tons is something that you're looking to achieve in FY24.
Major unforeseen circumstances, we are very confident of achieving the 10 million ton target.
Okay. Do you have the logistics ready to dispatch these kind of higher volumes, Mr. Gupta?
In one word, yes. Like I said earlier, we have already achieved run rates of that volume in the last 3 or 4 months, like in December, January, and in currently also we are on that same run rate. We have 3 sidings in place, network of road which is being repaired by us at our cost, and all that is ensuring that the logistics is well in place from Gadchiroli.
All right, Mr. Gupta, the EBITDA per ton, what are you making? If I exclude the other income, I think it has an element of GST, I think so, out there. Could you tell us, as per your calculation, what is the current EBITDA per ton? Because it appears, it's northward of 1,500 rupees. And where do you see this number holding? With iron ore prices that moved up in the last couple of months. So I asked you that.
So iron ore prices have moved up, but very steadily, and like the previous analyst said, that they might move down also. So I would say that the analysis would be that the future pricing more or less would be constant for the year, and given revenue, given the economies of scale, we should get a reduction in cost of around 150 to 200 rupees. Our current EBITDA per ton is around 1,800 rupees. So I think that is where we are, and economies of scale would kick in, and we should get a little better than that.
So then it will be 1,900 to 2,000 is what you wanted to guide approximately for this year?
Yeah.
Okay. All right. Got that. Tell us a little bit about the way forward. Earlier you had mentioned that you're looking at moving up the value chain, perhaps through funding, through internal accruals, maybe through capex as well. Can you tell us what is the capex planned for FY24 to FY26, and what would that mean in terms of higher production for you?
So we are got the approval, went to the board and got the approval for 2 plants yesterday. One was a steel plant in Chandrapur of 500,000 ton of wire rods. This would be forward integration. We are currently selling sponge iron and power. That would be used internally. We'll be expanding our DRI and power capacity, as well as adding a arc furnace-based steel plant and a wire rod mill. That will be around 500,000 tons of a little higher grade alloy, low alloy but higher grade of steel wire rod. That's the first plant, and the second plant would be a 4 million ton pellet plant, along with the Maharashtra's first pipeline of slurry from the mine to the plant, which is around 80 kilometers away, and that will 4 million tons with technology from Newford GmbH, Germany, and put together the total estimated capex is approximately 4,500 crore rupees. All of this is estimated to be spent through internal accruals only. That has been our mantra for some time, and we hope to achieve that going forward as well.
I'm just doing a back of an envelope calculation. I think the EBITDA for the year itself, going by what you're guiding, 10 million tons, and EBITDA of closer to 1900 should be closer around 2000 crores at least. That appears should be the rough calculation. Plus, you'll add this sponge and the other small contributions that you'll get. So 4,500 crores, mostly from internal accruals, is what you're telling us. The other factor that the street is looking at is you have another listed name, Sunflag.
Yeah. It will be executed over 2.5 to 3 years. So this would give us ample room to ensure that our stakeholders are also rewarded in line with the thought process that we have right now.
You know, stakeholders are wondering what's happening with Sunflag. That's the other listed company in there. And they have executed, you know, they've gone and converted the optionally fully convertible debentures into shares. For some, that's an overhang now, because suddenly you have a large name in there who have 6 crore shares of your company. What's your view out there? I mean, any conversations between both of you all? I know you all were in a legal tussle, but have you all had any kind of conversation? Point number one. And is there a possibility that you all could look at merging both these two entities, or that's not a possibility at all?
Post the arbitration award and the execution of the arbitration award, we have very, very warm relationship with them. They are our consumers and our stakeholders now. And the overhang is there, but as it is, our liquidity in the share market is not too much. So I'm not really worried about that, but we have not had any conversation with them on any of these issues that you have mentioned. And there's no talk of any merger in one word, no.
Yeah. Okay, we'll let you go on that note. Thanks a lot for joining in and speaking to CNBC-TV18. By the way, the market may be quiet, but there are plenty of buzzing stocks. So let's take a quick break on that note and come back and tell you about